Hi, and welcome back to Investment Banking University. This is our investment banking course, and we're on the second side of the perpetuity, the sell side, and this is where we discuss the responsibilities of the investment banker. We're actually talking about part of the core responsibilities of the investment banker, namely mandate target matching. And this is our mandate target matching methodology at Investment Banking University. So after determining one's coverage and then initiating coverage in the form of index building, it's important for the investment banker to then begin matching investment mandates of strategic and financial buyers to targets within the investment bank's coverage. The mandate target matching methodology is the following. Number one, build relationships with strategic and financial buyers in a given industry, sector, or subsector, and indicate your interest in sourcing deals on their behalf and obtain their investment mandate. This will usually be detailed in a one-page teaser or a presentation that they will send you. What you're going to do next is you're going to screen for companies that match the mandate in Sales Genie or a similar platform, and obtain the CEO or owner emails and phone numbers. You're going to begin emailing and calling the CEO and owners and soliciting their interest in taking an offer on their business from a financial or strategic buyer. What you're then going to do is, after they are receptive to you and you go through that process, you're going to structure the engagement as a sell-side engagement or a buy-side engagement. And we're going to talk about the difference between the two and how you ultimately structure them. And this really depends on the CEO or owner's level of interest in selling. From there, you're going to collect historical financial data for the last 3 years. You're going to summarize that data, calculate adjusted EBITDA, and perform a valuation. And then you're going to introduce the financial and strategic buyer to the opportunity with the summary financial information and have them sign an NDA. After this meets their thresholds or hurdle rates and target criterion, you're going to have a call with the financial or strategic buyer and then make a formal introduction to the CEO or owner and have a buyer-seller meeting. And we're going to get into the specifics of each steps later on in the course. So this is an infographic just depicting exactly what we talked about. Initially, we're going to be building relationships with strategic and financial buyers in a given industry or subsector. You're going to indicate your interest in sourcing deals on their behalf, and you're going to get their investment mandate. So ultimately, at a high level, we're matching strategic and financial buyers' investment mandate or corporate M&A mandates with given targets that are in our coverage. So that's exactly what we'll be doing and what is the core responsibility of the investment banker. So after that, we're actually going to get into deal structuring, and there are 5 components that we've identified as it relates to deal structuring. Number one, we're going to be talking about the difference between a majority versus a minority stake in the target. And so before that, though, after matching a financial and or strategic buyer's mandate with a target, it is up to the investment banker to work with the buyer and seller to structure the deal. Deal structures can be along the following lines. Minority versus a majority stake. Is it going to be paid with cash, stock, or cash and stock? What is the aspect of seller financing, if any at all? Also, the aspect of the earnout, meaning the portion of the purchase price that's going to be contingent upon future performance of the company. And then the last portion of the deal structuring is we're going to be talking about whether or not the seller is going to stay on as management versus a consulting agreement for the shorter term. And we're going to get into much greater detail in the courses as it relates to each of these. But these are the components of deal structuring. So that's it for this video. We're actually going to get into the M&A process in the next video.